Well, this week on Bay Radio, I'm joined by James Stirling. How are you doing, James?
Very well, thanks, Howard. Good to be back.
Yeah, always good to catch up. Well, since it's income tax time here in Spain, we're going to have a look at who needs to submit an income tax return and the complexities of declaring overseas income. So, James, who needs to submit a Spanish income tax return, and what is the deadline?
I think a useful place to start with this, Howard, is what does it mean to be tax resident in Spain? So, to be tax resident in Spain, you have to physically be here for more than 183 days. Now, if you have been here for 183 days, then you need to submit two different documents. So, the first is your Modelo 720, which has to be done in March of each year, and that's for the calendar year previously. The second of which is a tax return detailing your worldwide capital income and gains. And that's how the tax calculation is made. And that has to be done before the end of June.
What types of income need to be declared?
So again, we're talking this on a worldwide basis. And if we're thinking about general income, this is taxed depending on the autonomous region, but the rates range from 19 to 54%. And the income that needs to be declared within that is any employment income, any pension income, and any rental income. The other tax that you need to declare is savings income. And this is not different in different autonomous regions. It is the same across the whole of Spain. And this savings income is taxed at a rate of 19 to 30% on a sliding scale. And this includes capital gains tax, any interest, and dividends too.
Many British expatriates living in Spain continue to generate income in the UK. Do they pay tax in the UK because that's where the income is generated, or do they pay tax in Spain since they live here?
It's a really good question, Howard, and I think there's often this misconception that just because you're in Spain, all your taxes are paid in Spain and nothing goes to the UK. The simple answer is it depends on the type of income that you're receiving. So, for example, lots of our clients will move to Spain, maybe keep their home there and let it out. Now, the way the system works is you will have to pay your tax in the UK first if you're letting a property. You will have your personal allowance, and then you'll have to declare the income in Spain too. But because of the double taxation agreement, you're not having to pay tax fully in the UK and fully in Spain. You're just going to have to pay, if there is a difference between the UK bill and the Spanish bill, you'll pay the difference to the Spanish authorities, the Hacienda. Another useful point to make here is pensions. So from next April, they're going to be included in UK inheritance tax calculations. And this is a really big question for our clients at the minute. Do we pay it in the UK or do we pay it in Spain? Now, this is complex, but the simple answer is initially, if you've not managed to get a non-tax code, an NT tax code for HMRC, then when you pay the capital from a UK pension, it will be taxed under PAYE as standard, and the tax will be paid there. Again, like the rent a property, you get a tax credit, and that'll be offset against your tax bill here in Spain. But often what clients don't realize is for defined contribution pensions, if you've got a SIP there, if you've been tax resident here for a while, what you can do is approach HMRC in order to get an NT tax code. And if once that's provided and it's been updated with the pension provider, then they'll be able to pay that income gross to you, and then all you have to do is submit that on your tax return. So what I would say with all these types of cases, it's really important to find a financial advisor who can advise you on the best route and how to structure this, but also have a good accountant that can be pragmatic to show you if there's anything you can do to make your affairs more efficient.
There's not much you can do about tax on your employment income. But what about investment income? Are there compliant opportunities in Spain to reduce tax on your savings and investments?
Yes, absolutely. And I think this is something for clients that's often overlooked. If you've been here a long time and had an accountant here, They can basically just file the returns and they might not be giving you the advice to make things more efficient. So in terms of Spanish solutions that we have, if we're looking at this from a UK tax perspective, we don't have things that are tax efficient like pensions or ISAs. But what we are able to access within Spain are a number of different products that allow the capital to grow tax-free, with any interest or dividends being tax-free from that portfolio. But essentially, when you take money out of it, you will pay some form of tax. But if we compare it to a pension, if you take money out of a pension, the full amount's added to your general income tax return. For the Spanish compliance solution, only the gain element is taxed. So if you'd invested 100,000 euros and it grown by 10% to 110,000, and then you take that 10,000 withdrawal from it, because it's grown by 10%, only 10% of the 10,000 is taxable. So that would be 1,000 euros taxed at rate of 19 to 30%. And if you happen to be married and you set up as a joint policy, then that would be split between the two of you. So it's a really good way to grow capital in a tax efficient manner, but also to complement either your rental income or pension income or employment income. It can ensure that you're having a tax efficient income stream from your overall circumstances.
With increased information sharing between the UK and Spain, how important is it for expatriates to ensure they're fully compliant with their tax reporting? And what are the risks of getting it wrong?
It's a really good question, Howard. And I think historically in Spain, the view of the hacienda has been slightly different to maybe us Brits with HMRC, and that's probably been quite politically correct. You're completely right. Information sharing has increased in the world of technology and now AI. So the information that the hacienda has on you here or HMRC in the UK is increased. And also, as you rightly say, there is more sharing between governments. So I would say there's never been a more important time to ensure that you are being compliant with both your returns in the UK, if it's applicable, and here in Spain. The other part to it is, if you get things wrong, then there can be late fees and interest payments. So ensuring that you have a financial advisor that's giving you the right information in order to ensure that the tax returns are filed correctly and your accountant is ensuring things are doing as efficiently as possible is really important, because the costs of not doing things correctly can actually be rather stringent.
If listeners want to get in touch with Blevins Franks, they better get their skates on.
I would indeed say that. And I think a fantastic place to start would be our website. We've recently revamped to include a lot more information on the process that we go through for clients. And if you need any more information on anything we've discussed today, go to blevinsfranks.com and there's a number of guides that will give you more information.
Many thanks, James. And I think we're talking next week at the same time.
Thanks, Howard. See you then.